Hello, I'm Martin Smith and this is your MaxiForex Week in Review. Today we'll cover some of the major events of the past week and discuss how they impact the global currency markets. The euro declined against the US dollar and the dollar index rose as US consumer confidence dampened, decreasing risk appetite. Spanish and German government bonds indicate that the respite in the euro debt crisis due to the European Central Bank's unlimited 3-year loans is coming to an end. A survey of economists has shown that the European Central Bank will probably restart government bond purchases rather than providing banks with another round of unlimited 3-year loans as the sovereign debt crisis worsens. German bond yields fell and borrowing costs in Spain surged to the highest level since the ECB started long-term financing operations in December. Spanish 10-year yields increased above the 6% level this week, closing in on the 7% level that helped to spark the bailouts of Greece and Portugal. With borrowing costs in Spain and Italy increasing during the past week and the euro coming under increasing pressure, investors are looking for alternatives to eurozone assets such as sterling. The euro was last trading at 130.75 versus the dollar, a decrease of minus 0.84%. The British pound increased last week due to the resurfacing eurozone crisis. The United Kingdom retained its AAA grade with an outlook of stable, as Standard & Poor's ratings failed to agree with Moody's Investors Service and Fitch ratings on the risks regarding the British government's ability to pay its debts. The British pound was last trading at 158.46 against the dollar, a decrease of minus 0.70%. In commodities now, oil showed its 5th weekly decline since February as China's economic growth slowed, and the Saudi Arabian oil minister said that Saudi Arabia is determined to see lower oil prices. Growth in China trailed forecasts by the most since the third quarter of 2008. The economy grew 8.9% in the fourth quarter and 8.1% year-on-year in the first quarter, the slowest expansion in 3 years. Oil prices decreased as US stocks declined and the euro fell against the dollar for the first time in 3 days. The weaker euro and the stronger dollar are diminishing the appeal of crude oil as an alternative investment. The oil price may continue to decline next week on speculation that negotiations between Iran and world powers over Iran's nuclear program will reduce tension that has fueled oil prices. Oil was last trading at $102.83 a barrel, a decrease of minus 0.78%. The price of gold declined almost 1.5% on Friday as a stronger dollar led a rush of selling with rising fears about the eurozone debt crisis and the decline in Chinese economic growth data, which is worrying investors. Gold was last trading at $1,657.68 an ounce, a decrease of minus 1.06%. Well, that's all we have time for today. I hope you've enjoyed this week's review and you'll join us next week. Until then, be sure to visit us at MaxiForex.ru.